preparing for a business solutions advisor at Bank of America interview? You've reached Candy Mentor, and this video is for you. We'll walk through 20 key questions you're likely to face. For each question, you'll see a sample answer followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. Tell me about yourself and why you are interested in the business solutions advisor role at Bank of America. I've built my experience around client-facing sales, financial problem-solving, and relationship management. What attracts me to this role is the chance to help small business owners simplify banking, manage cash flow, and access the right solutions. Bank of America's scale, digital tools, and strong local market presence make the advisor role consultative rather than transactional. I'm comfortable asking good questions, earning trust, and turning client needs into practical recommendations. While answering, focus on your client-facing background, interest in small business banking, understanding of Bank of America as a platform, and ability to combine sales goals with responsible client advice. Question 2. What do you understand about the responsibilities of a business solutions advisor? A business solutions advisor connects business clients with banking solutions that support daily operations and growth. I would start by understanding the owner's business model, revenue cycle, payment methods, borrowing needs, and pain points. Then I'd recommend solutions such as business checking, merchant services, cash management, credit, or referrals to specialists. The role also requires disciplined follow-up, compliance awareness, and partnership with financial center, lending, and treasury teams. Make sure to cover daily responsibilities, needs discovery, recommending banking solutions, partnering with branch and specialist teams, managing a pipeline, meeting goals, and maintaining compliance with client onboarding and account processes. Question 3. Why do you want to work for Bank of America specifically? Bank of America stands out because it combines a national platform with local relationship banking. For small businesses, that means convenience, digital capability, lending access, and specialized support under one brand. I'm also drawn to its focus on responsible growth, which fits how I sell. Understand the client first, recommend what is suitable, and build long-term value. I'd be proud representing a bank with strong products and a recognizable client promise. In your answer, talk about Bank of America's brand strength, local market presence, digital capabilities, responsible growth culture, and how its broad product platform helps advisors support business clients holistically. Question 4. How would you identify the needs of a small business client during a first meeting? My first step is discovery, not pitching. I'd ask about the business's revenue sources, seasonality, average balances, payment acceptance, payroll timing, vendor payments, and near-term goals. I'd also listen for friction, such as cash flow gaps, manual processes, or fees. From there, I'd prioritize the most relevant solutions and explain the business impact clearly. A strong recommendation should feel like solving a problem, not selling a product. Be sure to mention consultative discovery, asking open-ended questions, understanding revenue cycles, payment methods, cash flow gaps, growth plans, pain points, and translating the conversation into tailored recommendations. Question 5. How would you explain the value of a business checking account to a new business owner? Business checking is the operating account for a company's daily cash movement. I'd position it around transaction volume, balance patterns, online banking needs, deposits, wires, ACH, and account controls. The right account can reduce friction and create visibility into cash flow. I'd also make sure the client understands fees, ways to avoid them, and how the account connects to merchant services, credit, payroll, and digital tools. While answering, focus on operating cash flow, transaction volume, account features, fee transparency, digital access, separation of business and personal finances, and links to merchant, credit, and treasury solutions. Question 6. How would you explain merchant services to a business client who is not familiar with it? Merchant services help a business accept customer payments through cards, online checkout, mobile devices, or point-of-sale systems. I'd explain it in terms the owner cares about: faster sales, easier reconciliation, security, and customer convenience. I would also discuss pricing, settlement timing, chargebacks, and integration with their accounting or sales system. For many businesses, better payment acceptance directly improves cash flow and customer experience and retention. Make sure to cover card acceptance, online and mobile payments, point-of-sale systems, settlement timing, pricing, chargebacks, security, reconciliation, and how better payment options can improve customer experience. Question 7. How would you determine whether a business client needs a line of credit or a term loan? I'd first separate working capital from long-term financing. If the need is short-term, like inventory before a busy season, a line of credit may fit. If they're buying equipment or expanding locations, a term loan may be better. I'd look at cash flow, time in business, collateral, credit history, and repayment capacity. I'd avoid overpromising approval and bring in lending partners early to set clear expectations. In your answer, distinguish short-term working capital from longer-term financing. Discuss seasonality, equipment purchases, repayment capacity, credit profile, collateral, and the importance of involving lending partners appropriately. Question 8. How do you balance sales goals with doing what is right for the client? I balance goals by anchoring every conversation in suitability. Sales targets matter, but the fastest way to miss long-term goals is to push the wrong product and lose trust. I'd use a needs-based process: discover, confirm, recommend, and document. If a solution helps the client run the business better, the sale is credible. That approach supports Bank of America's responsible growth culture and repeat relationships. Be sure to mention suitability, responsible growth, long-term relationship value, needs-based selling, avoiding product pushing, documenting conversations, and building trust that leads to repeat business and referrals. Question 9. Tell me about a time you handled a difficult or upset client. When a client is upset, I focus on control and clarity. I'd let them explain the issue without interrupting, acknowledge the impact, and confirm the facts. Then I'd explain what I can do, what requires escalation, and when I'll follow up. Even if I can't deliver the answer they want, I can deliver professionalism, ownership, and transparency. That often restores confidence in the relationship quickly. While answering, use a clear situation-action-result structure. Highlight listening, empathy, fact-gathering, ownership, escalation when needed, follow-up discipline, and your ability to preserve the relationship under pressure. Question 10. Give an example of how you would cross-sell without sounding pushy. I see cross-selling as connecting related needs, not adding random products. For example, if a restaurant opens a checking account and mentions high card volume, I'd explore merchant services. If they struggle with payroll timing, I might discuss cash management or credit options. The key is to explain why the next solution matters operationally. I'd rather make one relevant recommendation than 3 weak ones quickly. Make sure to frame cross-selling as needs-based advising, not product dumping. Mention identifying related needs, using client language, explaining operational benefits, and only recommending solutions that clearly fit. Question 11. What compliance or risk considerations matter when onboarding a business banking client? Compliance protects the client, the bank, and the financial system. In this role, I'd be careful with identity verification, business ownership information, beneficial ownership, transaction purpose, and unusual activity red flags. I would never bypass a control to speed up a sale. If something seems inconsistent, I'd ask clarifying questions and escalate through the proper channel. Trust depends on doing the process correctly every time. In your answer, cover identity verification, business documentation, beneficial ownership, KYC, transaction purpose, unusual activity red flags, accurate records, escalation, and never bypassing controls to complete a sale. Question 12. How would you manage your pipeline and prioritize your day in this role? I'd manage the day around urgency, revenue opportunity, and client experience. Time-sensitive service issues and scheduled appointments come first, but I'd also reserve blocks for prospecting, follow-ups, and partner referrals. I'd use CRM notes to track next steps, decision dates, and open questions. A good pipeline is not just a list of names. It's a disciplined rhythm of outreach, preparation, and follow-through each week consistently. Be sure to discuss balancing appointments, service issues, prospecting, referrals, follow-ups, CRM discipline, revenue opportunities, client urgency, and maintaining a consistent rhythm instead of reacting randomly. Question 13. Tell me about a time you met or exceeded a sales goal. In my last sales environment, I exceeded a quarterly goal by focusing on conversion quality, not just activity. I reviewed my pipeline weekly, identified stalled opportunities, and reconnected with clients using specific value points. I also asked for referrals after successful conversations. The result was stronger close rates and fewer last-minute scrambles. That experience taught me that consistent preparation beats bursts of effort at month-end. While answering, give a measurable example if possible. Explain the goal, your plan, pipeline actions, follow-up process, conversion improvement, and what the experience shows about your sales discipline. Question 14. A client says your business account fees are too high. How would you respond? If a client says fees are too high, I wouldn't argue. I'd ask what they're comparing against and what services matter most. Sometimes the issue is not the fee itself, but unclear value. I'd show how features, digital tools, cash handling, fraud controls, or payment speed can offset cost. If another option fits better, I'd discuss it honestly. Make sure to avoid defensiveness. Cover listening, understanding the comparison, clarifying value, explaining fee waivers or alternatives, discussing total benefits, and staying honest if another solution fits better. Question 15. What fraud risks should small business owners think about, and how could you advise them? Small businesses are often vulnerable because owners move fast and controls are informal. I'd discuss practical protections like account alerts, dual approval for payments, positive pay where appropriate, secure online banking habits, and separation of duties. I'd also encourage clients to verify payment changes by phone and monitor accounts regularly. Fraud prevention is a strong advisory topic because it protects cash flow and builds credibility. In your answer, mention account alerts, payment controls, check fraud, online banking security, positive pay where appropriate, dual approval, employee access controls, and client education as advisory value. Question 16. How would you partner with branch teammates and specialists to serve a business client? I'd involve specialists when the client's need requires deeper expertise or a better regulated process. For example, complex lending, treasury management, merchant setup, payroll, or wealth needs may require a partner. My job is to identify the opportunity, brief the specialist clearly, and stay engaged so the client doesn't feel handed off. Strong internal partnership creates a smoother client experience and higher quality recommendations overall too. Be sure to discuss collaboration with financial center teams, lending partners, merchant services, treasury or payroll specialists, clear handoffs, client ownership, and keeping the experience seamless rather than fragmented. Question 17. Why is cash flow management so important for small business clients? Cash flow matters because a profitable business can still fail if money arrives after bills are due. I'd ask when revenue is collected, how vendors are paid, how payroll is funded, and whether seasonality creates gaps. Then I'd connect solutions such as lines of credit, ACH, merchant settlement, or account alerts. Helping owners manage timing is one of the most practical ways to add value. While answering, focus on timing of receipts and payments, seasonality, payroll, vendor obligations, inventory cycles, working capital gaps, and banking tools that improve visibility and flexibility. Question 18. How would you encourage a business client to adopt Bank of America's digital banking tools? I'd position digital tools around convenience and control. Many owners don't want more technology. They want fewer trips, faster information, and less manual work. I'd show how online banking, mobile deposit, alerts, bill pay, transfers, and user permissions support daily operations. During onboarding, I'd make sure they can actually use the tools. Adoption matters because unused features don't create value for the client or bank. Make sure to discuss convenience, account visibility, mobile deposit, alerts, bill pay, user permissions, reduced branch trips, onboarding support, and showing clients how tools solve specific daily problems. Question 19. How would you handle a client whose business credit application was declined? I'd handle it with empathy and accuracy. First, I'd explain that credit decisions are based on underwriting criteria and that I can't override the outcome. Then I'd review what can be shared, such as next steps, documentation, or alternative options. I'd avoid blaming or making promises. If appropriate, I'd help the client understand how stronger financials, time in business, or credit history may improve future eligibility. In your answer, show empathy, accuracy, confidentiality, no overpromising, explaining available next steps, discussing alternatives where appropriate, and helping the client understand factors that may improve future eligibility. Question 20. Why should we hire you as a business solutions advisor? You should hire me because I bring the mix this role needs: consultative sales discipline, client empathy, financial curiosity, and follow-through. I'm comfortable having goal-oriented conversations, but I don't treat clients like transactions. I ask focused questions, connect needs to solutions, and partner well with others. Bank of America needs advisors who can grow relationships responsibly, and that is exactly the way I work daily. Be sure to summarize your strongest fit: consultative sales, client empathy, business banking interest, goal orientation, compliance mindset, teamwork, follow-through, and alignment with Bank of America's responsible growth approach. If you are still with us, congratulations, you are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.